Hello and welcome back. What a morning. Holy cow, the NASDAQ is under huge pressure. It's impressive that it's only down 23 to 25 points. If you look at the internals of the index, Salesforce.com is down 10%, Cirrus Logic is down over 5%, NetFlix is down nearly 5%, NVIDIA is down 5%. We could keep going, but the bottom line is that earnings report from Equinix, which is being obliterated by over $30 a share this morning, is taking much of the tech with it. It's really a hideous drop, quietly missed, with the Dow only down 20 and the S&P just down 5. So what do you do right now? As you know, we are short put spreads in NetFlix, CREE, and Salesforce.com. CREE looks like the healthiest of all the massive decliners. It's only down about 3.5% compared to an average decline of 5% by all the other names. Salesforce.com is taken out to the woodshed, down 10%. We still see about a 70% chance that CREE finishes next Friday trading above 52.5. This means that the 52.5, 50, 47, 45, and 42.5 strikes should all be just fine for October expiration. Those who are long options at this point are really running out of time. They only have 7 days to be right, and theta is really heating up. Remember, that's the amount that the option loses each day as we draw closer to expiration. Don't panic just yet. We are still short the 55-45 put spreads in CREE as well. We will very strongly consider simply rolling those out rather than looking for down and out to November so that we can capture a strong earnings season. But if next week continues to disappoint for earnings season, then we'll change our thesis and try to escape this position down and out. Maybe all the way to next year so that we can get low enough to not have to worry about getting into danger. This is how we got rid of very in-the-money put spread in Goldman Sachs, rolling it out to April for an additional credit that got us all the way to the 130 strike, $20 less than where Goldman trades right now. Next, NetFlix is the next strongest of these short put spread trades. We added to the position today by selling the October 140-135 put spreads, and will likely add the 145-140 put spreads to it as well. You should be able to collect well over $1 for the 145-140, and we took in about 75 cents for the 140-135. NetFlix is fighting with the 149 mark right now and is down from north of 170. We'll get into next week so that nearly all the time value is sucked out before we make a decision. We do have some 150-145 put spreads that were short that have clearly been violated, but the stock is about $1 away from getting back out of trouble, so we'll keep the position on for now. Okay, now the massive slaughter, Salesforce.com. First, under $100 is your green light to get long. This is a wildly successful company that is dominating the cloud software market. It is used by dozens of the world's most profitable companies and continues to come out with new offerings their clients want. It's one of the pure play cloud plays and is extremely well run. So not only are we selling October 95-85 put spreads in CRM, but we look to take the other side of the trade under $100. We are short 110-100 put spreads. We'll again take this into next week, but there is a close to 100% chance that we're going to have to roll down and out, and almost certainly into next year considering how badly this one has gone against us as we're essentially at max loss. In order to capture additional credit on rolling this position, we'll have to roll out to the January 2012 105-90 put spreads. Clearly this means you'd have to be in the position much longer than anticipated. The other option is to increase the size of the position, and you can roll down and out to November for an additional credit. This is our preferred way to get out of the trade. You'll take an additional credit, get closer to out of the money with the 105-95 put spread, and you only have to be in the trade for another 30 days or so. Okay, so mention us on Twitter with more specific questions if you have them. Let some of this volatility get shaken out. The volatility in these names is really pumping up options pricing, so a few days of smaller moves will really take volatility out. The only position that really requires immediate action is the Salesforce.com if you're short the 110-100 put spreads. Good luck. Thankfully, earnings season kicks off in earnest next week. RPM products actually came in better than expected despite the year-over-year drop. We'll be listening to the call today to see if we can glean some more details out of the call for you in regards to housing and construction. Micron is tomorrow, and that's one we're really looking forward to. PepsiCo is in the morning tomorrow as well. That'll give us a good look at the health of the consumer, as snacks and sodas are clearly discretionary items, despite how much all of us like potato chips. Have a good day, and we'll see you tomorrow.